All right, good morning, everybody. Midweek, hump day. I will be streaming in the large caps this morning, 9:15. The MOC yesterday going into the close was really big and opposite of the previous day. On Monday, the MOC was really high on the buy side. I had converted it into Thinkorswim watch lists and posted it in the chat. Yesterday it was completely the opposite, really large on the sell side. We're looking at 101 markets on the buy side and 324 markets on the sell side. It's a little bit of that capital rotation, and it's the name of the morning briefing today. Backing off of the 50 point. So, if you guys remember when the media was playing some word games with the Fed, asking each one of them individually, starting with Bosick, would you support a 50 point rate hike? And of course, every Fed said, yeah, I would, but, and then they would go on and explain the but the but never made it into the headlines. It was just, oh, Bosick supports 50. And then they would go to the next Fed and ask them, hey, Bosick says he'd support a 50. Would you do that? And they would only keep the headline when that Fed would say, well, yeah, of course I would if we need to, but. And so they had the market all jacked up thinking we were going to get this really aggressive, really hawkish Fed. And we sold off really hard into that because they were pricing in this 50 point rate hike or very aggressive liftoff. And what we've seen in the last few days, it's one of the reasons that the market hasn't just completely crashed and burned, is they're unwinding that 50 point basis rate hike. They're starting to realize that, it was all overblown, it was overhyped. It's very unlikely not going to be a 50 point rate hike. There's not going to be that aggressive of a Fed at liftoff. And personally, I think the adjustment of the balance sheet is going to do just as good, or as is going to help as much. But yeah, whatever. Either way, so we're seeing that. We're seeing where the market is kind of holding this level. We've got a lot of negativity out there, and yet it's still maintaining without crashing and burning, and that is a part of the big why, right? And of course, I keep seeing people in the chat point out technical signals that say, oh, yeah, if it crosses this level, I see Microsoft as a buy, or I see Microsoft as a sell, or I see this as a buy if it crosses this level. Guys, you go out trading right now in a swing trade, you better damn well know how to hedge, right? Otherwise, you trying to go long in this conditions or taking new swing trades in these conditions without a way to individually hedge your portfolio and or the individual trades you're taking, you're just going to Vegas, baby. Just going to Vegas, you're throwing the dice. There's been a little bit of a whisper about the attack on Toyota. And it was a little bit of a backhand to Japan for their sanctions on Russia. Should any of the three major names that we often talk about, Japan and European Union, United States, should any of those three be hit with cyber attacks for retaliation on these sanctions in a significant way, you're going to see this market crash and burn. That's going to make COVID look like a dead cat bounce. So just be very cautious, guys, with the current market conditions. I don't care how good the setup is. I don't care what your technical analysis indicators tell you. If you don't have a way to hedge that trade, you probably don't want to take the trade. All right, so we're still seeing that safe haven trade, right? We were calling it the Russian indicators yesterday: gold, oil, keeping an eye on the bonds, the dollar, the VIX, Bitcoin. This war is beginning to be more prolonged than even Russia had anticipated. It was supposed to be a 2-day incursion, and now we're on like day 8, 7. We have the Fed talking in the House today, or the Senate. He's going to be up on the Hill chipping his teeth. The market gets really boring around this time, right? If you're trying to trade at SPY, trying to trade the Qs, it's very likely going to be kind of flat out there. And for 3 out of the 4 markets that follow SPY, they're also going to be very likely flat. He may occasionally say something off the cuff that could move the market a little bit, but for the most part, it's going to be Operation Don't Rock the Boat. Okay, and so his entire job is to open his mouth and say crap that doesn't move the market. And really, at the end of his sentence, when he shuts his trap again, that he ended up saying nothing at all. He's going to get browbeat by the senators. They're going to ask him stupid questions that are insult him and insult his profession and insult all of us, and then ask him to fix all of our calamities and all of our problems, which he doesn't have the power to do. And when they're done beating on him, then they're going to call it quits for the day. That's about the long and the short of it. He's not going to make policy. He's not going to give any policy announcements. He's not going to suddenly, unless he slips, he's not going to suddenly say something we didn't already know. And slips do happen. In the taper of 2013, it was during one of these congressional meetings that the taper was dropped. The whole idea that they were going to begin a taper, it was dropped during a congressional meeting, just like this. So accidents do happen. He can, just like anybody else, make a mistake and rock this market. So just be prepared for a very boring morning with him really not saying anything. And then when he's done, we can get out there and maybe get some trades on. Right? It is a 0 day, and and with the Fed on the Hill, this morning should be a perfect iron condor morning. Right? You put on a 0 day iron condor, straddle both sides of the fence, and run that thing until noon, and then get the hell out of it. Yeah, yeah, is what I like. Yeah, you like it. High impact, high impact, high impact. Right? Got a number of them. High impact. Just don't get caught on these things, guys. You know what? Trading is difficult enough without doing the hard stuff. Man, I got a lot of stuff open. Nah, nice candle on Apple. Outside, outside candle. I'm going to just zoom in here and take a second to point this out. The bottom of the weekly expected move. We hit it Monday. We came back in the box. We're still holding the range. We are in it, right? We are in the range. We are a long ways away from the top of that expected move. And we are now day number 3, maintaining inside of this one single day back here. We're just winding up more and more and more and more and more energy, right? We've talked about this in those videos that I made about the RSI Laguerre and the gamma inside of that, and how we learned a lot about how the markets move because of that indicator. And it taught us a lot about the energy in the market. And it's not a phrase that we had ever really heard before that indicator came along. You know, we've talked about inertia and momentum and trend and strength, but energy was not something we'd ever really, contemplated on. And when it comes to the energy, when you think about throwing a ball to somebody, and that ball is only going to travel with the force that you threw it, and as it travels, it's going to lose its strength. It's going to lose that force. You take that same ball and drop it off of a 20-story building. The more it falls, the faster it goes until it reaches max velocity. So when we're talking about energy and a market and the move, we want to have a very good understanding is Is that movement with energy behind it, or is that movement to gain energy? And with that indicator, we actually can answer that question a lot of times. So we do want to look at the calendar, go to Market Watch calendar, clean it up so it's only showing the Econo Day event. Set these two next to each other. 8:15, 10 o'clock, 10:30, 2 o'clock, and then the rest are for around the world. So not our problem today. Tonight maybe, but not today. That status report for the petroleum, normally I would say that we don't care. Today we care. You might want to pay real particular attention about this status report today. Right, and this is no kidding. They're talking about releasing reserves and trying to make up for a serious lack of oil now. Right, they've just told a major world producer that world producer cannot supply energy. They better damn sure find a way to replace that, or we're going to have a crisis on our hand of epic proportion. Right. If you don't remember when we took not the Saudis, but when we took Iraq and Iran and all of those Gulf states, when we took them offline and told the world that they were no longer allowed to use that oil and we started sanctioning them, go back and look at the market structure when that happened. There's been a couple of key places throughout history that are worth going back and looking at. 2001, 2008, 99. Right? Go back and look at the S&P in that time frame, SPY, SPX. And study those charts and get a good grasp of what it is that we're facing right now. So the docket is clear. We know exactly what we're facing today. A whole bunch of boring, a whole bunch of nothing. And then in the afternoon, once we get past that beige book, we're good to go. Keep your day trades short, right? You want to get in and get your business and get back out. And if you do want to swing, I'm not saying that you can't swing trade. Heck, I'm in some swing trades myself. I totally get it. Just be ready to hedge that stuff. Right. And it's a simple thing. I'm not saying go build out some complex hedge. If you buy a call, before you buy that call, just think about what call in front of it are you going to sell should you need to, so that if you buy the call and the market starts to dump, you can sell a call. You can recover some of that risk. Or buy a put. And when you buy that put, before you buy it, be thinking about which put are you going to sell, so that if the market starts to rip to the upside, you're selling puts on the way up. You can make money on it on either side. Just a hedge, just a way to cover your butt. So the range is pretty clear. I would say it's a pretty clear range. We've been holding in the box, just like I was showing on that higher time frame. And at this point, it's not going to be a massive amount of technical analysis that defines this, right? It's going to be the news. It's going to be what's going on in Russia. We do have a breakout setting up here that reminded me of a setup. I took a picture of it and threw it in the chat in the bullish bears. Let's see if this looks familiar. Yeah. So there's your consolidation. There's your breakout. Breakouts and entering on the preceding base. If you didn't get it, you missed it, but looks like we may have a Busby. Remember, the Busby only owes you back to the top of the range. We're stuck in this box, and you can see the volume here from the last 10 days, right? The greatest amount of that volume. This is a 10-day, 30-minute chart. We've got time in blue and a volume in green. And we're at the point of control on both of those. We have a little bit of support down along these lows, this really nice little micro double bottom down here. And that's the game changer. We break through that and know we're going to revisit these lows very quickly. There's no volume nodes down there to really help out except for around 4250. So that would be our last line of defense. Basically, between Thursday and Friday, that Globex low, that's your last hurrah. We break through that, and we're going to revisit this failed flag play down here. And that would get us really far out of the box. There's no expectation of that today unless the news gets really, really nasty. And there's no expectation that the news is going to get nasty other than, Russia's getting really fed up with this skirmish. A nice little word for it. They're getting impatient and they want it done and over with. So we need to be kind of a little aware of that. There's talk about restricting airspace, and the planes that they were going to restrict are supposed to be announced today, mostly cargo and passenger jets and whatnot. That kind of news could kind of shake us up a little bit, but I don't expect it to be negative enough to really drop us down. So unless Powell puts his foot in it or Russia does something that really rocks the market, we're going to be expecting another day and maintaining inside of this range. Normally, we would say we go from high to low, low to high, high to low. We're in the middle, right? When you're in the middle, we could go either way. We have no expectation that this market is in any way done. There's nothing positive enough to bring us out of this. There's nothing negative enough to put us any deeper at the moment, right? So it's just toe the line and look for opportunities to trade. And the really good thing is there are plenty of opportunities to trade, right? I mean, there's just been absolutely amazing trade opportunities out there. So there's there's plenty of money to be made for the Nasdaq. Same thing, really tight range. Nice little break pop to the upside. Busby has been completed. Remember, it only owes you back to the top, and that was all that we got out of it. We're still sitting inside of yesterday's range, so at the very least, we're going to expect to maintain that range. State of the Unions are always boring. Um, I went back and was watching a couple of Reagan's old ones when I was in college. We had to dig a little bit into politics, and oh my gosh, they're just so boring. It's basically an advertisement. But if you were to go back and read some of the State of the Unions from, say, the late 1800s and the early 1900s, yeah, man, there was some rowdy State of the Unions back then when politics was different. Clear range, got that double bottom along the lows. It held, it stuck. We have no reason to believe that we're going to break these ranges without some kind of catalyst. But the ranges are very large. There's a lot of room here, plenty of room for opportunity. But it's been, kind of back and forth, a lot of reversals and wishy washy setups. Take the play, get your money out of it. Don't be looking for, big running, sweeping moves that stick and last for hours. It hasn't been that kind of market. So just, you know, uh, jab and shuffle, move your feet, keep moving, right? It's not that bad. Everything we talked about for the ES fits for the NASDAQ. That we have no real expectations of this thing going anywhere. And if we do, it'll be directly connected to news. And should we break those lows, it's going to get really nasty really fast. And we'll be looking at around 13.7. That'll be the last line of defense. You get below 13.7 and it's going to get nasty. Right. And none of that will happen without some sort of catalyst or news. So we're not going to just grind our way down there. Uh, keep your eye on the sectors. We've been watching Bitcoin because of its uh, it's just so new in the world right now when it comes to, what do you do if you got runaway inflation and gold is sitting in nosebleed sections and there's an opportunity. We don't know all the ways that Bitcoin is going to be used now in the in the grand scheme of things. Plus, when Russia was telling people that they couldn't get out of the ruble and exchange it for something else, they just went to Bitcoin and went right around him. So, you want to keep your eye on Bitcoin. It's been a gauge that we've been using. Gold, the dollar, the bonds, and the VIX. Oil is, of course, the other one. So the grid looks a little different right now just because we've been using these other markets. These other markets are the best indicator that you can have on your chart right now. All right, so we're looking at the sectors. As you would imagine, oil is doing pretty good this morning. Cloud computing is actually up a little bit, which is interesting. We're still underneath some critical levels, but a lot of the names that are in cloud, and it's weird. There's a lot of really big names that are in cloud, right? Google, Amazon, Microsoft. A lot of big names are in there. There's an ETF for that, or I mean, there's a chart that I made for that, so we can go in cloud, Dropbox, Plan, Netflix, WDave, Fastly, Shop, Twilo. All of these names make up this cloud ETF. And ZS is one of those that are bid up. This is going to pan out as a red to green setup. Now it's a green candle instead of a red one. What we're looking at here on Zscaler, excuse me, that it closed here, and we want to see it rally up in the pre-market very close to or even above yesterday's high. If it doesn't rally all the way out in the pre-market, when it opens, we want to see it rally above that and break this level back here. This is the critical line in the sand because this is your dominant candle, right? That's your controlling candle. So we want to see a breakout of this candle. And if it starts to fade down at the open, we want to see it find support on yesterday's high and then have that continuation. This is what they call a swing low pattern. And after a swing low pattern, we expect each new candle to open, get that wick along the low, and continue to move up. The new candle opens, get that wicks, get the next one. Now, a little word of caution, that really big wick across the top, that's a lot of selling pressure. Now, a lot of times when a market can't get through a level in the daytime, it'll make that move in the overnight hours. So that's what we're going to be watching for here. This is one name on the list in a sector that's up this morning in the pre-market. For any of these names that aren't up or down at least a half of a percent, we're not even going to really focus on them too much. Want to lean on the higher end. Gold, for an example, down 1%. Silver down 1 3/4. The devil's metal taking a little punch in the face. The Qs, the diamonds, finance, technology, all up this morning. So we're going to be looking to see if this sticks, and very likely have the opportunity to run it back down again in the other direction. What we don't have in names here are the legacy, beyond the legacy names, like the EV market. And you can see that the EV market is kind of a mixed bag. GM and Ford, Tesla, some blowout moves this morning. This is that linear regression play. A serious whack to the downside, and now we're looking at a red to green setup. This is a perfect red to green setup in Ford, by the way. So they took a very hard punishment. They got a capitulation candle back here. Started to come up where everything was doing good. A warning with an inside candle. And then it dumped down seriously hard yesterday. Now in the pre-market, there's our red to green. We closed down here yesterday. We're getting near this open today. And we want to see this come back towards that $18 level. This could be a really nice play. If it doesn't stick, and it very likely won't, if we rally up in the pre-market and it doesn't stick, we're going to be looking to run this thing back down, and our ultimate target will be $16. Guys, be careful out there. Be safe. And I will see you all in the large caps chat room.